if it's backed into the corner and it's got to pick either I got to start letting debts default here or slowing the economy a lot more with a higher cost of capital, or we got to let inflation rage hotter longer than we want. Do you think the Fed's going to pick the latter?
I think they have to. I don't think they have a choice. I mean, the dirty little secret is the only way the Fed was able to step back to even try to tighten is because of inflation. They need inflation to run hotter for longer. The policy prescription for pretty much every instance of debt to GDP being this high in a twin deficit nation is significantly negative real interest rates for an extended period of time. And they did it for a compressed period of time and they weren't negative enough, right? So we had 12%, 11% nominal GDP growth in 2021 with, at the end of the year, 8% CPI. And we saw US debt to GDP come into the year at 2021 at 129%, end the year at 122%. Great. They delevered by 7% because bondholders got screwed on a real basis because inflation was running 8 and yields weren't. The challenge is that you need to run those numbers. I think you got to get to 70 to 80% of debt to GDP. So, 122 to 80 is 42. We need 6 more years of that rate of deleveraging, right? We delevered by, 42 points, 7% from 129 to 122 took those numbers, right? So I'm just linearly running it. Maybe even you give yourself a benefit of the doubt. We need to do it non-linearly, right? To say, okay, 7% deleveraging of the debt to GDP per year to where the Fed can raise rates without blowing up the system. It's just a normalized policy without blowing up the system needs 12% nominal GDP for 5 years with rates at 2 and inflation at 8. And the problem is if you tell people that ahead of time, who's the sucker at the card table who's going to hold bonds under that scenario? The answer is nobody. They're going to sell them all to the Fed. And so that's where I think we're still in this part of the game where people are still looking at what the Fed's saying credulously. They're not looking at where they are, which is the only way they were able to even back away from markets is because inflation was running so hot. Now, I do think you'll probably see some deflationary headlines over the next 2-3 months, right? Whether you're looking at, home prices with inventories building, you're looking at retail inventories. Obviously, there's fire sales going on. You're starting to see inventories build across the economy. I think you're going to see some inflation. At the same time,
sorry, you mean deflation, right?
Or excuse me, deflation. I think you're going to see some deflationary impulses. At the same time, I'm not sure energy prices are going to move down a whole lot for both geopolitical reasons, cheap energy reasons. I think commodity prices aren't going to move down as much as they would like. Maybe it's a little bit sequentially, like they have already do some commodities, but I don't think as much as they need them to. And so then they're really stuck in this rock or a hard place point. I think the only choice they really have, and I think critically, tax receipts are going to move with inflation. You're already starting to see it. Tax receipts were down double digits in May, year over year. It's a noisy data series, so I don't want to get carried away with it. I would bet pretty good money they're going to be down big again in June. They'll probably be flat in July because the year ago comp's really easy. Because if you remember, 2 years ago, we moved all the April tax receipts into July when we deferred the tax collections in the COVID year. But tax receipts, I think, are going to be terrible for the next 2-3 months. And so the problem with that is that your deflation, the deflation's coming down. The ability for the Fed to back away is coming down, but at the same time, your Treasury supply is going to have to go up. But unless Treasury sort of runs down the Treasury general account, right? They've got sort of this checking account that they've got some money in, $500 or $600 billion, I think the number is right now.
Right.
They can fill in some gaps, but it's finite. And so you're getting to this point where it's decision time. They are going to be cornered from the standpoint. The question you just posed, do they loosen into a spike in still elevated inflation, or do they keep tightening? And if they keep tightening, it's only on the other side going to make the amount they have to print to basically save the system from collapse even greater. It's going to be like COVID again, where they're doing, $600 billion a week or something to basically keep the Treasury market functioning. I don't know if that's the right number or not. I've not done the math on that, but it's going to be some number where we're all like, wow, that's a huge amount of QE. So, but that decision point, I think, is coming by the end of 3Q22 at the latest.
If you're correct, we're not going to have all that long to wait to see, the next chapter of this story. Let's assume for a moment that they do this. Okay. You talked about some of the challenges on the financial side in terms of what bondholders might do and stuff like that. But let's just talk. Let's make it super, brass tacks practical, right? You've got a populace. We've had this large and growing wealth gap for a couple decades in this country. We got a lot of people now that these stimulus funds that they received during the pandemic are gone, and they're really beginning to struggle, right? Everybody is feeling the impact of 8+% CPI. So if the Fed pivots, stops tightening, and potentially goes back to easing again, that's going to be pouring gasoline back on the inflation problem. Like how long can we exist with that? Like how long before, I asked this question a fair amount, but I'm really asking now, like how long before the pitchforks and torches come out? At what point is the breaking point not a financial markets one, but it's a social one where people just say we can't deal with this anymore?
Yeah, it's a tough question to answer. I mean, I think.
Well, let me ask you this: is it something that keeps you up? Like, are you worried about it, or are there things you worry about more than that?
There's other things I worry about more than that, but that is a function, I think, of where you live, where those types of questions. I think the populism has already really started. Like I think Obama was the first populist president, right? He was hope and change, and then he sort of brought in a bunch of Wall Street guys, and it was nothing different. He was Clinton part two, effectively. And then that wasn't enough, so then we got sort of in the same year two bigger shocks, right? We had Brexit and we had Trump, and they were sort of bigger shocks. And even then, I don't know that I think when we go back in history, or once the history books are finally written, I should say, I think Trump's going to go down as the guy who finally basically highlighted some of the lunacy of the system as it was structured. We're borrowing money from China to build weapons to face down China, or our supply chains are beholden to China, our military is beholden to China in terms of a lot of critical components. Our economy is, we're defending the Germans from Russia while the Germans are buying Russian gas, as Trump famously pointed out on camera, right? Some of these, but even then, we're sort of back to a system guy with Biden. I really don't know the right way to answer the populism thing. I don't know what's going to, what the sort of snapping point, tipping point could be. I suppose it could be anything. I mean, quite frankly, I think we're heading towards some version of UBI. You're already seeing it in England, where they're talking about handing out, I think 350, 326 pound checks to people a couple times this year, to a third of the population, to help them with living costs.